All right, hello, hello, hello. How is everyone doing this morning? I was talking to you. You eat your chips. All right, so we just got our CPI data in. Came in exactly as expected, and we're kind of seeing the responses that we had assumed we were going to see. Are obviously seeing a little bit of movement inside of the yen, and we talked about that yesterday. Um, and again, it's not really so much yen strength as it's yen being a proxy on that one. But you can see yen is, again, dollar yen, pound yen, both down, quite large amounts. And we knew that that was sitting up high. Aussie yen was kind of a similar thing as well. Excuse me. Seeing it kind of, peak quite high up there. So, overall, when you look at this based off the data, 51, 68, US, Swiss 11, 39, 48, -8. Not really seeing anything crazy out there. And the data came in as exactly as expected. And as predicted, again, seeing the media is playing it exactly as what we assumed yesterday. Basically saying, back in the day when the CPI was really, really rough, right? You had the Fed saying, the core is really what matters. Now, remember, this data right now is based off of December. Okay. When did we get cheap gas? It was December. And remember, this number right here, the CPI number, is excluding, right? CPI is everything, and the core number is excluding gas, right? Food and energy. So if we had super cheap gas in December, you would expect the CPI number to be lower anyway. And that's exactly what it did. It came in lower. And again, Kramer was even picking on the egg thing, and they're like, well, that's not this. That's avian flu. Yeah, it is, but just another factor in there. But again, excluding food and energy, right? Excluding food and energy. So a positive number, right, with the most volatile ones, but a negative number overall. And again, a lot of this I think is going to be tied back to gas. So again, remember, Bernard said that CPI doesn't matter, guys. It's the core that matters. But everybody's celebrating right now that again, it's a first negative. It's a negative number. And actually, somebody said that this is it. People see this negative number. Besides back here in 2020, we know what was happening over here in this time in 2020, right? Remove this out of there. I think it's been since like 1950, right? Since there's been this type of movement or negative negative CPI with things. So again, how do you take this? I mean, is 6.5 great? Well, the mandate's 2, so we're still 3.5 times more than what we should be, right? That's not great. Harker, he's one of the presidents out there. Not necessarily the I would say that Harker is one of the main guys, right? I mean, yeah, Harker's, I guess, kind of a big name, right? He's kind of big, but is he, the main guy? No, not really. So, but Harker and everybody else has consistently said the same thing. 5% is what we're looking for. We're looking to get it to 5, and then we're going to hold it there and kind of see where it goes. And he made it appropriate to do 25 basis point hikes, okay, for the next couple of times, right? Many people have said we're going to have a couple more raises because, again, we got to take a pass where neutral is, and they're assuming that this is what neutral is. So what they're looking at right now is we're at 425. We'll go 25, 25, 25. That'll put it at 0.25 over the next 3 times. Now, the market right now is taking this as like, yep, this is the victory. The Fed is done. Stick a fork in them. But what are they going to feel like over the next 3 meetings or whatever when they raise it 0.25, 0.25, 0.25? Get it to that 5% mark, and then we start to hold it from there, right? So how's the market going to take it? Some interesting comments talking about how thus far everything else is showing that things are working, minus labor. That labor is strong, and people are like, we're not in a recession. But we had all our PMI data came back, services and manufacturing both below 50, showing that we are inside of a contraction. But the labor market is strong, and as we mentioned, companies are laying people off, and but again, hiring and everything else like that looks great. So kind of came in as predicted, no major surprises. And again, we like the surprises out there. Lots of whipsaw back and forth with the number. The immediate response was straight down, and then it was an immediate response straight back up again. And that's kind of where we're at today. And that's assuming, that's how I assume that the market is going to handle it today. it's going to be considered as a positive. Like, yup, it's working. The Fed is there. Kramer pointed out something interesting. In his, they always give him, some speeches in the morning as well. He says, yeah, no, if you had to look at this, with it coming down on the timeline that people said, you would, kind of have to assume that like whoever was in charge of the Fed, was doing a good job, right? Because it's following the timeline that they're saying thus far. So overall, it does look like the plan that the Fed has is working. And again, they're seeing it drop to kind of the levels that they have. But at the same time, it's people would have to admit that Powell's doing a good job, right? And he says, yeah, we know the chances of that are slim to none, right? That people are going to fully admit that one. But I mean, I don't think there's anyone else to take it. You kind of have to look at that one and say, yeah, it's working. It's coming down on a year-over-year basis. But again, is that really the most important? What they did mention today was one thing. They said it's going to take some time, and actually Harker said it as well. He's still worried about the long-term impact. It's likely going to take a couple years for us to get inflation to the 2% target where it's supposed to be, meaning that we're going to stay at these high inflation prices for a while. I think it's interesting, right? I still think there's a lot of surprises out there that people aren't looking at. We've talked about how what they don't want to do is that we don't want it to stop and then come back later. What they said is on the year-over-year basis, again, it takes some time for that to catch up. Well, I mean, they actually did mention the month-over-month numbers, right? I mean, these are the month-over-month numbers on core. Steadily rising, right? It's not stopped. It hasn't hit zero. Maybe it hit zero again, but the fact that it went from a 0.5 to 0.3 was great. And then 0.3 to 0.2, yeah. But then it started to tick back up again. So, like I said, I still think we're in for a couple more rate raises. I think the 0.25 is appropriate. I mean, it doesn't make, it's not a bad thing. I think that's fine, right? But what will the market do with that one? Because again, they are raising interest rates. Everything right now is literally signaling, yes, we're just coming out of a recession, or we're in a recession right now. And there's a lot more things, a lot more movement to happen, right? And that's assuming that there's no other major changes that happen out there in the world, i.e., what happens if China does something? We mentioned yesterday how a bunch of jets went into there. Today they published data from a think tank. I guess it was a DC think tank, maybe, or whatever it was. Basically, with all scenarios they ran, and I guess it was specifically like a submarine analysis or something. All scenarios they ran, the good news is the U.S. can stop and cripple China, that they will not take over Taiwan, right? Granted, we lost 30% or 40% of the forces that we used to do it, but we can stop them, right? We can stop them. But if that comes through, we know that it won't just be a war thing. It'll be supply chain disruption. So, assuming something like that doesn't happen, we're good to go. But if it does, again, we'll see where this goes. So, good data. Got some room to run. A lot of different articles, a lot of opinion pieces on it out there. And they brought up some good points today. We expected right now that, we'd be in an ice age, that we'd be in gloom and doom. Again, everybody is still surprised by how labor is resilient as it is, but German markets, they're within decent percentage moves of all-time highs. They are recovering nicely as well. And remember, Ukraine was supposed to be like the end, right? It was going to kill everything, and it hasn't. And it's still continuing. It's not ending. And again, they're close to all-time high. So the mystique of and all the problems that Ukraine offered. It's not affecting everybody as much as they thought it was going to affect them. So, yeah, we're learning from it as we go. Now, tomorrow, right? Oops, hold on. Let me switch this back. There we go. Tomorrow morning, we have some GDP data. And again, the FTSE, right? The German market, the UK, the London market is kind of we know it's within range of an all-time high, but yet GDP forecasted to go lower, right? Right. We already know they're in a recession. And I guess it's considered a deep recession. But for some reason, their stock market is continuing to rally. They were bringing that up today. They're within 10% of like an all-time high. So it's shown that it's been extra resilient. And then we have the consumer sentiment tomorrow. Now, it's expected to go up a little bit, right? There's inflation expectations of where it's going to be. Again, the sentiment is important as well. I think right now with company layoffs and people getting worried about it, I wouldn't be surprised if this number is a little bit of a miss. I don't know if it's going to be necessarily something earth-shattering where it's going to be like, oh, that's it, the markets. That's it. We're killing it. But it may be something. right? Overall, it's going to be something, but nothing too big. I think the big one was CPI. And again, we know that CPI is not even the Fed's preferred method. It's great, though. I mean, if suddenly people believe that the Fed is doing a good job, maybe they will kind of pay attention to what they're saying, but we'll see. I'm sure there'll be some more headlines today. CNBC a little while ago, actually, I didn't actually look at this article, but I saw the headline of it. Here it has tough in the capital markets with contraction and recession fears becoming more accelerated in the U.S. Yeah. The energy crisis inflation has not yet peaked. I don't know if it's peaked or not. I feel like if nothing else changes, we probably are at a peak, right? But, we'll see. I don't know if I quite go there. But right now, I say, look, 11 minus 9. And again, it's retracing back again. So, I mean, we're getting the acceleration out of the U.S. market at 8, 5, 16. So, a lot of retracement back up and forth. And again, getting a heck of a lot of strength in there. All right. So, looking at the VIX. VIX is down, as it should be, right? It's absolutely down. Now, what's interesting is all the indices are down pretty good right now, which is kind of interesting. I'm surprised they are down right now on that news. It's funny. CNBC was really celebrating it, and everything was up at the moment, but now everything is down. I wonder if actually the big market, and again, this could be, I'm going to click on one of them. Yeah. It looks like what happened with the number popping, the opening candle would be here. Looks like there's a lot of retail traps out there. I'm wondering, they're all going to look exactly the same. It's a very interesting trap. We shot down, up, and then we're collapsing. Definitely a retail trader trap, it looks like, out there, because that data came in as expected. Now, remember, CPI is what the media is talking about. They're like, yeah, this is great. This is the one that we really need to be concerned about. And again, this is not great, but obviously when it's 7.1, you're like, yeah, it's working. It's working. I wonder if if the big money is going to blast the markets today. Or I'm wondering if the fact that all they're talking about is they're going to raise 0.25, 0.25, 0.25, and people are like, holy crap, that's another 0.75? What? It's working now. Why don't we just stop now? I wonder if that's going to be the theme of the day today. Interesting. All right. Anyway, commodities all up big. Look at natural gas. Kramer actually was mentioning natural gas today, which I thought was interesting. He said, who would have ever guessed that natural gas would be the cheapest fuel in the world right now? And remember, natural gas is one of those things that, the United States, they have a ton of it. We could export a ton of it. And they wanted to cripple Russia and make it not worth it. But it was one of those things that it's an area that we dominate, so we can't make it worth nothing. But it's interesting that it's worth nothing. Or not worth nothing, but that is the cheapest fuel right now. Oil also starting to surge again. It's at 1.27%. That number yesterday was huge, and yet it continued to raise higher, which again kind of makes sense, right? If the United States is not dying, and again, inflation is coming back under control, that shows that, again, labor is good. But everything says recession, and we've seen pullbacks in all the other areas. That means the Fed should start laying off the acceleration pedal. But oil continuing to rise. So again, kind of a weird assessment there. And again, as it continues to raise higher, it's like, well, And then again, gold and silver, absolutely not surprised that they are both in the green right now. They had definitely a whipsaw effect, and we're seeing those rise up. Silver doing what it should. Again, we'll break that down in a little bit. Again, I think the data today, absolutely, the market is so sure that the Fed is going to do nothing else. And that's what they're looking forward to. Like, yep, this is it. It's working. The Fed needs to do nothing else. We'll just stop it right here. That's not the Fed's plan. And the market has been basically saying like, whatever. I know they said that, but they don't really mean it. They're doing what they mean at this point. So looking at the Aussie dollar first, are we surprised that there was a immediate smack high and then a drop back to the downside? No. Absolutely not. I mean, drop this one down to a 5-minute. You can see here, right? Boom, boom, boom. And then we're collapsing back down again. It's literally right now, it's exactly where it started. Parabolic move up, and people were looking at this like, wait, what happened? It literally went boom, boom, and right back down again. I'm going to tell you, why did it do that? Here's why, okay? The Fed has said what they are going to do. So, again, that's why things like that are, again, pretty risky. When they jack up like that, that's how you handle it. And again, I think this is absolutely the right response to it. And again, that's why we're seeing gold bounce around. Absolutely right response. But, considering this is where we were before news and we're sitting right there right now, it's basically dead flat. And again, this is a 5-minute chart. Look at this. It's been stuck. People are like, what do you mean? Is it done? Is it not done? What are we doing? Right? So, gotta love it on the start. Bink, bink. Still waiting for this 685. Because again, the market's looking at this like, well, yeah, it's working, but they said they're going past, and they're kind of reaffirming that they're going to do the 0.25, 0.25, 0.25. So, yeah, it's bringing some more dollar strength in the market. So I would expect it to come down. And again, the alert is live on that one. We'll still wait for it to see there. Anybody that unfortunately bought up here, I feel bad for you. Yeah, you got retail traded. Yeah, kind of got pumped and dumped on that one. So anyway, break of 6. Again, I'm not going to cover it 2 days in a row. We know what's there. Aussie, we talked about Aussie being, and again, Aussie really started the rollback yesterday and has continued to go down. It's kind of like they knew, right? Yesterday we were sitting right up here. We were saying we were looking for this one to be short. And again, you can see this 90 to 96 area. Look at all the basing in there, right? The original level we talked about was kind of a Harry Potter trade set up over here. We expected to break, and it did. It based and kind of pulled back again. And look at this. 8:30, right? Price started moving. US trader went in. Boom, right back to the downside. So, next area we're really looking for on this one is down here at the 50, sitting at 98.78. That's a level that's been front run a few times. This one didn't quite get down there. I think that's a decent level over there. I think that's what we look for right now. I'd like to see what it does in the next 40 minutes. There's a lot of people that got jacked around on this one on news with it going up and down. Kind of like to see what happens. If we can get down there and start kind of basing, I think there can be a bit of a reversal. And that would be a decent level. Being 50, I could see that being a turnaround point. But right now, again, the momentum is basically straight down. It's every retail trader waiting until 9:30 to get into the markets. Yeah, they got the rug pulled out from under them. So, right now, again, nice move. It really started late last night. And again, we're seeing that continue push to the downside. So, yeah, we talked about it yesterday. Nothing we can do with it right now. Remove that. But nice little spike on that one. We're still on the top there. Yeah, we're still on the top side. So, still more bearish bias, but I wouldn't be surprised if we have some type of a pop. Actually, you know what? Right now, we're probably more neutral territory. I want to see what happens. I think being close that it's 950 right now, I think we will run into something down here, and we had a little bit of early confirmation from it. I think there's a potential reversal to somewhere in this level. And again, maybe we use that level. How much risk is that? 16. Yeah, it's not a bad level of risk on that one. All right. Euro dollar. Zero surprise. We were calling for a big push down. All it did was it sent it up and then pulled right back down again. So I was actually playing that one. And I said it yesterday. I was actually looking at this one to be zero. I was looking for it to be flat, not negative. And I thought that would give us like the spike right away. But all it did was people saw that, were like, yeah, it's weak. And then there's your collapse. So crazy thing is, this was like the zone we were talking about. We've been here forever. And even with news that big, right back down again. So we can extend this up and we can start looking at this one. Unfortunately, this is what we got. We can remove the top side of it now. Let's see. I actually don't mind that top in there. I don't know if I'd quite use this one for Harry Potter. Like I said, it's hard here because this was the bottom end of the channel, right? There's not a lot in here. There's a little bit of a hiccup right there. Maybe we shrink that just a bit. That box, the green box there. It's about 13. It's not horrible. 1 to 3 is sitting right there. That's decent. Oh, look at that. I missed it by 1 pip. Get better. There you go. There you go. So we kind of have two Harry Potters in here, and again, they're based off at different levels. But again, it was a decent pop. Basically, what this is breaking through the bottom side of that channel. Um, yeah, it's just breaking through the bottom side of that channel. Not bad. I'm okay with that one. I'd like to see it base in there. Again, like I said, it pushed it pretty deep. So there shouldn't be many buyers in there. But if we start the base, I think we pull the trigger on that one. 113. I'm sorry, 13 pip risk, 40 pip in the other direction. It's not bad. It should get it. It'll get us in right before the profit target. There'll be a little bit of a hiccup right down there. And all that is shooting back down towards the 50, which is at 106.61. Okay. Euro pound. So Euro's taking a nice little pop here off that news, right? Um, um, let's see. Let's run this all the way up. Look at this. Here's that zone. How about that hit right to the downside? Right? Not even US based news. Here, I'll bring it down to 15 so it's a little easier to see. Not even US based news. Right? There's your confirmation. There's your news trade. And again, you may or may not chose to trade the euro pound inside of like a US based news release, but there's 830. Right? Base, confirmation, Reddit news, pop to the downside. It may have been too small. Let's see. Yeah, like 6 pips. But obviously it ran 18. It ended up running 30. Yeah, it ended up running 30 in the other direction. So not too bad. Not too bad. Maybe we take a little Harry Potter off that one right now. Let's see, what do we do with this one right now? It was a nice 530. Look at that. I missed this one completely. Look at that. Right. 530 reversal. Right off of 50 in his zone right there. That was a nice one. Damn, I wish I'd caught that one. Now again, not necessarily the greatest zone, but we do know that there's gonna be people step in at the 50. No, no, buds. No. No. Yeah, I know. You don't need to play with the trash today. Yeah. Again, obviously a basing level, and it did take off. Not the highest quality zone that we like, but again, paired with the 50 and paired with a 530 reversal, right? Paired with the 530 reversal right there. Right. Nice trade setup. Anyway, again, we're almost up in the 89. Yeah, we were 5 pips off the 89. So I kind of like where we're at. I like to see a little basing up top. Tomorrow morning with his GDP number, I think that'll be a decent trade in the overnight. This is one you could trade going into the morning session. We're rallying up. I want to see what it does. If we can hold firm up here, I think it actually could be, the numbers so far that we've gotten, pretty much with everybody else, have been better than kind of expected GDP wise. I know the pound has all their own problems and stuff like that, but I'm wondering if it's gives us the opportunity to get some type of a setup on this one. Again, we need to see pre-markets. We need to go through the US session on this one. But I think we may actually potentially get able to get a short into this one. In the euro pound anyway, kind of like a long trade. Again, the negativity is already kind of implanted in the market. If it is negative, they're already preparing for negative. The market is already adjusted for negative. So that's as expected, right? If it's not as bad, if we have a miss, right? Again, coming in as expected, it's already factored in. People see that, and there's a play on that one. If it is a miss, it's not quite as negative. That would be positive. We're already sitting on the high side. We should already be a bit bullish this pair. I'm sorry, bearish this pair. I think again, 2 out of the 3 possibilities or 2 out of the 3 scenarios are kind of helping us in this one. So I like this one for more of a down. You can see it coming in right there. Let's mark it off. And again, I'd like to see, I don't know if we need the base over in here or something like that. I don't know where it's at right now, but that's kind of what I'm looking for right here. If we can be somewhere up in this range. And again, maybe we put a top in and then we get a confirmation. So maybe we put a top, right? Maybe we put a top in here, right? And this has to be adjusted. And then we come back up again and we're testing it somewhere around the open. I don't know where the top is. Maybe the top is there, right? Maybe it looks more like that, right? If we're coming up and again, if this is sitting like that, That's kind of what I'm looking for news. All right. Your yen. Look at that. So close. Man, this one doesn't want to give us the trade either direction. We got 2 trade setups here. And all it's doing is going between the 2 sides. So obviously we've picked our zones well because we have it boxed on 2 sides at this point. But I do like the fact, I do like this. Oh! No.